Recording.
Hello guys, Bruce here. Today I'm going to start our session with kind of like reviewing what we're doing last week. So there was a video that I sent out to few people, actually those who attended last week's session. That video, it was kind of like summarizing the last week's session, and also there was a few things that were said that I'm going to cover or make it easy for you guys to understand, right? So with that, so today we're going to do things like example. We're going to start with supply and demand. How do you identify supply and demand on your charts? And also we're going to cover PCPs, CPs, and PCPs. How do you identify them? And then after that, we're going to go on to types of zones, because when you trade supply and demand, there is also something we call zones, right? So the zones, they are the one that actually tells you when you can enter, and if that zone that you see, if indeed it's a strong zone that you can do trades on, or that you can enter your positions on. And then lastly, then we're going to do analysis. So we're going to analyze few pairs that we're going to trade together. And also we're going to talk review last week's trade that I gave during the live session, how it's performing, if it's a time to close it, and the likes, right? So with that in short, I'm going to start pasting this. Where is my whiteboard? Okay, my whiteboard is here, right? Okay, so yeah, like I said from the beginning, we have types of demand and supply. And if you remember well, last week we talked about valleys and peaks. And also we talked about CPs, which stands for continuous patterns, and PCP, which stands for potential continuation patterns. All right. So from last week, just a reminder, we said a peak looks like this. A peak is something like this. Okay, we said a peak is something like this, and a valley, it's something like that. And like I said, this on your charts, you'll see them represented by V's, or they'll be looking like V's and inverted V's. All right. So that's what I call a peak and a valley. So this one here, it's a peak. All right. So it's kind of like, it looks like an upside V. And then this one here, it's a valley, right? A valley looks like a V, right? So from last week, if you remember, we said every chart is made up of those patterns, okay? So when, as a trader, when you read a price action, you will always see those kind of formations printed on your charts. Okay, so now we're going to go on our charts, and I'm going to show you valleys and peaks, and mostly at the peaks. Okay, at the peaks, you will find something we call supply, right? Remember, we are trading supply and demand. Okay, supply, you'd always find it most of the time at the peaks, and at the valleys, you'll always find what we call demand. All right, you'll always find demand. Okay, and what about PCPs and CPs? As for CPs, you'll find all of them at supply and demand. All right, and remember, we also said a valley, it will be most of the time valleys, they are made up of something like this. This is a leg down, and then a nice basing. Usually a basing, we call this stopper candles, and then you'll find something like this. All right, so when you look on your chart, you'll find this, it will be a candle that falls down, and then it pauses here, which means it prints this candle, meaning I'm stopping, falling, and then after that you'll find this other candle. So it could be 1, 2, or 3 or more. All right, so this, we said it will be a drop, base, rally. Okay, and then for valleys, you will find a candle like this. For a valley, your candle will look like this, and then you'll find still a stopper candle here. And remember, we said at the base here, where this stopper candle there, most of the time you'll find maybe you have to consider it a solid one, area that you can look at when you take a trade. If you find candles that are less than 6, okay? If they are more than 6, usually we will tend to say just ignore it, because it means there were too much trading on that area. All right, so this here, it's a valley, and then it's a peak, and then this one here, it's a valley, right? So now we're going to look this in our charts. So meaning we're going to identify supply and demand areas, all right? And so I'm going to share my screen with you. Okay. All right, so if you look at this chart, it's a pound CAD. So this one is 2 wiki. Let me find the one that is not 2 wiki. All right, so this is a monthly time frame. So on the monthly time frame, like when you look at this chart here, you will find here we have this area example here. Okay, let me make it a little bit bigger so that it can be visible, maybe with red color. All right. So when you look here, this formation, it was forming what we call a peak. All right. So, and if it's a peak, it will be made up of a zone, right? A zone here, like here, where it turns, right? That is what we call a zone. And the name of this zone, guys, is called a supply zone. Remember we said peaks, they make what you call supply zones, right? Even if we go down here, you'll see here still from here, from up here, going down, same thing. It's a peak, right? A peak, what does it create? It creates something we call a supply zone, all right? Supply and demand, we trade zones. And these zones are either supply zone, demand zones, or CPs, all right? So these are peaks. And then we have another one here. Still, this is a peak, all right? So we can just go up, let's go down. And do you have any other here? Another peak here, or invented V's, right? So still this is what we call a peak, all right? So this is what forms every chart. And all those peaks are called supply zones, all right? You trade supply zones when the market is falling or when the market is going down, all right? So, and then the second one we said is called a valley. And a valley, it will always be made up of, let me start from here. A valley, it will always be made up of a drop leg. A drop leg, meaning if you look here, we have a drop leg here, all right? Meaning drop, base, rally, okay? Which means price action was coming here, and then when it came here, price fell down, and then after that, it printed a base, and then went up, all right? And these are called valleys. So a valley, it will be made up of a base, and this base, meaning this was falling, and then it printed this, meaning no, I'm not falling anymore, and then it went up. So this is called a demand zone, all right? This is called demand zone. So meaning it's a demand zone, meaning it made a V like this, all right? Okay. So when the market moves up, it will create V's like this. V, okay, still here. This is V here, all right? So now, something that is very important for you to remember is this. For you to consider that a valley, you have to always look here. The next candle, it should always, the candle that you do, it should always, you draw, it have to make sure it's make a higher high. Higher high, it means you can see here, it was falling down here, and then heading up immediately when it crosses this high high, it means that the valley is now created, okay? So if it can be the same height, if everything could be the same height, maybe like this, right? So looking at this, I'll say this is the same math. This is, guys, is not a valley, all right? A valley should make something like this, okay? It should make a higher high for you to consider it a valley. And valleys at the bottom here, they are made up of something we call, again, demand zones, all right? So when we enter our trades, is either we enter using supply zones for the market that is going down, or demand zones for the market that is going up, all right? So I'm going to draw my zones here. It was a valley here, a demand zone here, right? Something here also, meaning tent, a demand zone, all right? So let me look at another one. Okay, I'm going to switch to weekly so that we can have more area that we can look at. Okay, like look at this. One is a valley. You draw your zone, right? Again, another V where here. You draw your zone, all right? Another V here. You draw a zone, okay? Let me check if we have any more. Okay, that's one's here. All right, another one here, like one V. There's a big V here. Nice one. And then here, another V here. Okay, so this is what makes up the move on the market. Another one here, a nice V. Another one here, a nice V, right? Or a demand zone, okay? Look here, another demand zone, another demand zones, all right? So in short, that is what makes up the market. So why am I saying the market is made up of those things? Those are actually what help us to enter our trades, okay? I'm going to show you an example of why am I saying that actually what is being traded on the market, okay? So when you look at this V here, I'm not sure if you guys see my mouse. If you see this V up here, you can find it made a basing or a stopper candle here. So usually you can draw it that up, okay? Or you can actually even draw it to be like that. And then after that, it printed another V here. Remember, it should make a higher low. So I draw my zone here. So when you draw your zones, usually what happens is you might find that the market will always reverses to go and to tap on those base where it has stopper candles, all right? Usually the market will go back to retest, like another V here, all right? So whenever the market reaches that area, most of the time the market respond, okay, or react. Look example here. Example, we have another zone here, all right? So the market went down, tested the area, went up. Another one here. This one is for going up is demand, okay? So for demand, again here, the market came down, tested this area, shoot up, all right? Then the second time, the market broke the area. When the market broke this area, it tested the bottom demand, all right? So look here again. This also is a valid area. So now let's still continue looking more at supply. This nice V here, this one, look, it wasn't tested, right? So market turned, and then here again, the market made a peak, went up, tested that peak, dropped, right? That is what makes up the market. That is actually how the market moves. So wherever you will see those nice peak like here, check this out. Okay, market tested, went down a bit, after that broke the area. All right, so again here, basing, went up, tested, then went up. You come here, we see another view here. The market tests this area, went up. Okay, so maybe with this, I can even say, let's look at the lower time frame. Maybe you can look at the daily time frame, all right? So you open your chart, and then you see this. So what happens, you identify your valleys and your peaks, okay? So which means you draw the first one, check, price not yet reached here, and then another one here, you draw this one, okay? Let's assume this price wasn't existing, okay? Which means you'll enter this trade, and you will make handsome pips, all right? Yeah, you'll make nice pips there, touched, and then it went up, all right? So, and now let's see for the peaks, which we call them supply. A nice V here, you draw, price will come back, test the area, fall. It's made another nice V here. Look, price tested here, and then it fell, right? So which means these are winning trades, guys. These are winning trades. And then again here, look, nice. Price tests the area, fell, okay? So you'll get maybe 50 pips or 100 pips there, all right? And then after that, you get your the price reaches your take profit, and then after that, maybe it drops down and broke the area, okay? So after that, what it do? It will create another V, or a demand, which we call a valley, right? So you draw the area. Look, just look how the market will respond. So the market was going up, up, up. This one, it took actually days. You can find it, that is even a month. And thereafter, when the market reached this area, look what happened. Turned, went up, okay? So even here, look, nice V here. So actually for this one, how you draw it, you add those two things. Look, okay? Even if you are a scalper, all right, look, market will come, touches, went up. From there, you can get 50 pips, okay? So when you trade supply and demand, you can trade as a scalper or somebody who do swing trading, all right? So look, and then the market went up, 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 and then it turned. So when the market turns here, it turned here, right? And look, it never went to test that area. So I bet that in the future, when the market reaches this area, like this one where it turned, we can just draw. We can just draw. The market didn't, for in the future, the market decided to pass that area. So you'll know later why that is possible. So let's look at the bottom V, and then we have another V here. Price touched, went down. Okay. And then this one, you can actually even extend it. So can extend it just to cover both weeks. Okay. Price went up, tested the area, and then fell. That is a valid trade. Okay. And then here again, price made a V here. You draw your area. Okay. Actually, this one, the values are like this. Okay. You cover the weeks, tested the area, went up. Okay. Another one here. This one. Nice V. Okay. Look. Right. So it went up, turned. Where it turned here, you cover the wicks of the candle there again, and we go down again here. Nice, went up, made a V, tested the area, fall down, and then same thing here. We have another area here. Okay, so it was coming down, 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 down. Let's see where it turned again here. This area, look, it went up, it went down to test the area, which we call, this is demand, and it went up. So in short, guys, supply and demand is just made up of those valleys and peaks. When entering trades, you are actually looking at those. Okay, so what we have to do, guys, don't just read and watch the video for later. After this, you go on the chart, look at the chart to see if what I'm telling you guys is actually really making sense. Because when you trade Forex, you're going to end up trading according to the way you understand, the way you see the market moving. All right. So for me, what I'm trying to do to you guys is to open your eyes so that you can look at the market with a certain view. All right. So that you don't be people who will be gambling, just haphazardly entering the market, because you have to understand how the market moves. All right. And if you understand how the market moves, you'll always be on the good side of the market. So which means more money, more profitable trades. Right. So those, now we are looking for something we call valleys and peaks, which makes up demand and supply. All right. So, and then another concept that we have, guys, it's something that we call continuation patterns. All right. So continuation patterns, as the word says, they are made up of stopper candles. All right. And remember from last time we said a stopper candle, a continuation pattern is like this, up, right? And then it will have a nice pause, and then again it will have a nice long candle. All right. So when you look at this chart here, look here, here, we have what this is actually what we call a pause on the market. All right. Meaning when the market moves up, it have to breathe. Okay. So the market printed these two long candles, and then the market paused and continued. All right. So now, how do you trade CPs or potential continuation patterns. So look, the market went up, and then after pausing here, just taking a break, the market reversed to test that area and then shoot up again. All right, those are continuation patterns. So let's look at another example of a CP that we can find. All right, so even this here, it's a CP. Okay, it's a CP, and here it's a CP, and any CP, yeah, even this, guys, it's a CP. All right, let me check another one if you can find anything here. Another one here. This is a CP. Okay, market tested the area, reacted a bit. I guess there might be something that was happening. Still here, we have a CP here, right? Look what happened at that CP. When the market fell, it tested this area, which means this was, though if you are trading this trade here, it will have made you to lose, okay? When you lose, or when it hits a stop loss for this trade, it means you have to look down where the market will return or where the market will turn. So the market came down, tested this continuation pattern, and then did shoot up. All right, look here. This also is a CP. All right, so I guess you know what this candles means. This candles, it means it opened here during that day, it reached this area, and then by the end of that H4 time, it closed here. Okay, and then after that, it rallied a bit. If you are scalping, you'll make a trade, you'll make a profit from, you'll have made a profit from this. All right, still this is a CP that worked. All right, let's look for another examples of CPs. This here, these are CPs. Price didn't come back to test them, but though price didn't, it's still a CP here. It's a CP, price didn't come to test it. What about this one? Price tested this CP and then rallied, or it went up. So when you look at the patterns, or when you look at your chart, that is what you have to see. All right, so with that, now we're going to continue with, I'm going to share with you the whiteboard again. All right, so now we learned about types of demand and supply, which usually are formed when you see valleys and peaks. Okay, we managed to identify the valleys, the peaks, and the CPs. All right, so now we have something that we call zones. All right, so when you trade supply and demand, you trade based on zones. It's not every zone that is tradable, right? Some zones are not tradable. Why? Because, meaning, when I say they are not tradable, I mean when you enter there are high chances of you losing. Okay, so we have the zones that are called fresh zones, retested zones, multiple zones, and original zones. So when price moves up, remember, you will see this. Let's say price will go down, right, and make a nice base in there, and then after that price will go up like this, all right? So when you look to your right, this side here, you can find that when you look this side, you can find that, let's say you are looking at the current chart, right? So which means this area on the right, no any price history is there, okay? Meaning this zone is fresh, okay? This zone is fresh meaning price never returned here to test the area, all right? So as you trade supply and demand, when you see this, okay, let me do this again. Okay, when you trade supply and demand, when you see this, you draw your zone, okay, like this. There is your zone, and here you set your stop loss and you set your TP, or you set your limit order, all right? So in short, this is what the area you use for entering your trade, which will be pending, and you will be waiting for price to come, test the area, and go up, right? So with that in mind, now it's a drop, base, rally, okay? This is called a fresh zone, all right? So now, as price will be going up like that, right? At a certain point, price is going to start falling down. Okay, so look, price now will start falling down to come and test this area. So when price comes back to test this area, which we call a fresh zone, now this area, it will no longer be fresh. It will be tested zone. It will be a retested zone. So now when you trade this particular patterns, guys, a fresh zone is a high probability trade, meaning there are 90% of that area working out or being profitable when you take that position, all right? So now this here, we call it, when it comes here, it means it's been retested. It's a retested zone, all right? So after that retested zone, now price, it's either price go down to break it, okay? But most of the time on the first test here, price will do this. 80% of the time, price will go up. Price will go up, all right? And if it happens that price now goes down, let's say price goes down, okay? And somehow it will be made a position here. So if price goes down, there is now this area here, we call it a retested area, right? So if it's a retested area, usually we don't trade it. We wait for something that we call confirmation trading. Okay, so meaning you have to look how price is going to react on the second retest. All right, so because price can do this, there's a high chances that price can break it, meaning you lose, right? So sometimes you wait here and then you wait for price to remove a certain area before you can enter on the trade. All right. So I said the first instance is called fresh zone. The second retest is that zone, it will means it's been a retested zone. All right. And then we have also something called multiple zones. All right. With the multiple zones, when the market retests the fresh zone and makes a new zone near it or above it, let me show you what I mean there. Okay, so we have a fresh zone. Okay, do that. All right. So price will be falling like that. Okay, and make a nice stopper candle there. Goes up, 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 and up. And now here we will draw our zones. Okay, we'll draw our zone here. So this one is, we can even say this one we said is fresh. Okay, so usually most of the time there are times where price will be falling like this. Okay, before price reaches this area, it makes a nice small basing like this, and it will go up, right, creating another zone on top of this fresh one. All right, so when this happens, we call that zone a multiple zone. Okay, meaning when the market was trying to retest the fresh zone, it made a new zone near the fresh one or above the fresh one. Okay, so why usually that happens? That it usually happens when the market didn't have enough power to test or to break the nearest zone or that fresh zone. Okay, and the other zones, type of zone that we have, it's a zone called original zone. Right, so now an original zone is the one that will be made out of blue, like from nowhere. The market is not reacting to anything. Out of the blue, the market decided to make a zone. All right, remember that zone could be a demand or supply. So let's say the market was falling here, market was falling, and out of blue, in the middle of the charts, then the market makes a zone like this, right? It means that zone is original, all right? So drawing it, we'll draw it like this, all right? Meaning still here, you can set your limit orders when the market comes on this also, it's one of the zones that is a high probability. It will give you higher probability trades. All right. So now let's go and look for fresh zones on our charts and retested zones in our charts. I'm going to share the screen with you. Okay. All right. So let's look at this chart. It's a pound USD. So when you look at this chart here, you can just right away, you can identify a zone that was fresh and market went back to test it. Okay. So look at this zone here. This one here. It was a fresh zone and the market went down to retest this area and then the market fell down. All right. So now the fresh one is this one. Okay. So meaning there's a high possibility that the market can come, go back, reverse, test this area, and then will go down. All right. So when you look also here, actually this top area now, if this side it didn't exist, we will be saying it's fresh. But now because it's already been tested, it means this area is a retested zone. Okay, it was retested. It's a supply that was tested and then it went down. So now the fresh one is this one here. Okay, the fresh one is this one here. So now if you go down on the wicks, we can actually even see here, we have zone number one, look. So went down, the market, this one is not fresh. It was a retest. It was retested by this ones here. So, which means the next one is this one here. Okay. So, which means now the market, it fell, and then it tested this zone that is fresh. That is a fresh zone here. Market now is on this fresh zone. So, meaning there is a high possibility that market will respond, will go up because it tested this area. The market might go up, okay, in future. All right. So now let's look more further. Do you have any original here? Let me show you the original zones. Okay. Yes. This one here. So example, when you look at this, it's a CP which made an original zone. Okay. So what happened? The market printed this original zone and it went back to test this original zone. If it was like this, without that retest, we've been calling that original zone. That was original zone. The market went back to test it and then it went down. All right. So Now, all this was fresh zone, fresh, this were fresh, okay? So now, something that is very important for you to know is that how do you draw zones when the market gives you gaps, okay? So usually when you see a gap on a chart, it somehow means there was manipulation, all right? When the price is moving, price shouldn't make gaps. So usually when you find a gap on your chart, most of the time price will come down and close that gap, okay? Price will always come down to close the gaps, okay? Let's look at example here, all right? So mostly gaps are formed on Sunday, or we can say on Monday when the market opens. So example here, on this particular day, the market closed here, all right? And then after that, the market made a zone here. Look, when the market went down, the market broke that zone and it went to test the bottom zone here, this one. All right, same thing here. So the market closed here, okay? And when the market opened, it left this gap here. So what happened? The market fell to close this gap. So usually when you draw your zones, always ignore the zones that are formed after the gap, because those ones are manipulations, all right? You should always draw the zones that are below the gap, right? Or else you'll always be trapped by that manipulations, okay? Let me check something here that I maybe somehow have what. So, and then something that is very important for you guys to remember is that usually gaps are made when there is news, or example, when Russia was starting a war with Ukraine, there's a high possibility that the following Monday, when the market opens, there will be gaps, okay? So sometimes gaps, we call them fake. When that happens, when the market leaves a gap, it will print what you call a fake signal. The one that is not fake is the one that was created before the gap, right? So what did we learn today? Today we learned about types of demand. Let me share this. Okay. Today we learned about types of demand and supply, which are valleys and peaks, CPs and PCPs, all right? And we also learned about types of zones that you'll find when you trade supply and demand. We have fresh zones, retested zones, multiple zones, and original zones, all right? So these are the basics that we have to look. And now when you look at your charts, always look for this, all right? So with this, I'm going to take 2 to 3 questions from you guys. All right. You can unmute your mouse. I mean, you can unmute your mics. And if you have a question, you are welcome to ask. Anyone with a question? Anything that I need to clarify from what I said? Anyone with a question? All right, okay. I'll assume there is no one who has any question other than you guys are going to find time and practice what you learned today. So let's review last week's trade that I gave during the session. It was a Euro USD trade. Okay, so last week during the session, we talked about, we were analyzing this together. So yeah, usually when I analyze, I draw my trend line. This you'll learn later. Don't worry if you don't understand it now, because I'm teaching you guys so that you can be able to do this on your own, right? So which means Euro USD on the monthly, at the monthly trend line, is showing that is going down, right? So going down, it means Euro USD, it can actually come to reach this area. But now, what is very interesting is this area was already tested, okay? And after this area was tested, there was a zone that was formed there. And when we draw our trend line again here, so which means the areas that there are only two areas controlling the market is this area here, that yellow one, and this area here. Those are what we call strong zones. So strong zones, they control the market, or they detect, or they depict where the market should go. All right. So when you look again on the weekly, now still looking at that, you can even still find that the weekly trend line, which should connect two areas, this area and this area, this latest two peaks, okay? Weekly still down, all right? What about daily? Let's look at the daily time frame, right? The daily time frame, it shows that Euro USD, do we have any value? Like here we have a PCP, another one here, printed this. Okay, so actually the valid area for this is here. Okay, so meaning on the daily is going down. So though it's going down, there is a strong area, this single doji one here, price broke this valley here. Okay, so as price broke this valley here, there's another PCP or CP here was printed here. Okay, so that is why when you look at this chart here, I'm going to delete this. I'm going to delete this one. Let me delete this big one so that we redo this nicely. Okay, so when you look at the daily, this area is a strong area. Why? Because it took out this area here. So the reason price turned here is because this area was a CP. If you go on the H4, you'll find that there are nice basins here, like here, base, and then that is why price, it turned down there, okay? So on the H4, on the daily, price tests this area. I think this area was tested on, if not Thursday, I think it was Thursday. It was on Thursday. Yes. Let me check. I can check that here. When was this candle printed? It was on the 10th. That was the high of the day. And the 10th was, yes, the 10th was Thursday, right? So usually for take profit, when you reach this area, because there is a pause there, you take your profit here. And then what happened? Price went down, okay? So price went down, and after that, it turned again. Why did price turn here? When you go down to H4, look what happened to H4. On the H4, there is a nice V here, or there is a nice valley, or you can say a nice demand here. Price tested this area and now is going up, okay? So why did I tell you last week that, I think it was, if not Tuesday, it was on Wednesday, where I asked everyone that make sure that you move your stop losses to this area here. It was because of that zones. When you trade supply and demand, you move your stop losses based on zones. If you decide to choose to be a swing trader, all right? Because if you're a swing trader, you focus only on adjusting your stop losses based on zones. If you are a scalper, you'll take your profits based on your risk to reward ratio. Example, how do you do risk to reward? You can do 2 to 1. Like example, if you find, look here, from here to, from here to here, let's say if this pair was to be against you, you're going to lose maybe $50, right? So if your risk to reward is 1:2, it means you're going to take profit when you make $100, right? If your risk to reward is 1:3, it means you're going to take your profit when you reach $150, all right? That also depends on the lot size you are using. You calculate risk to reward, guys, based on, like example, if I were to draw, okay, let me do here. Okay, I bought here. Let's check. Usually when you dragging down, like example, my risk to here, it says negative 272 pips. So if I were to lose this trade, I will lose $272, all right? But that will be my stop loss. So which means 270, my profit for risk here 1:2, it will be $272 times 2, okay? which means my profit will stand at 544. 544, it will be, where is it? 544, it's somewhere here. All right. So that is how you create, that is how you measure your risk to reward. So this trade that we took, guys, last week, I'm not sure how you guys, your trade performed. This is it here. It's still on profit. It's still $41 profit. So I took another one on the H4 here, okay? Because I was watching that zone. So this one, I took it, it was a buy limit that I set last week. It means, like you can see here, all of them there on profit, 500, 500. Don't worry, this is not a live account, guys. It's a demo account. So usually you find that the trades that I take on my demo account, I also take them on my live account. All right. So I just use this tool so that you guys, you can track this with me. Okay. So that is how our last week's trade it is at the moment. So I don't expect any one of you to have made a loss in this trade at this point in time. All of you should be, if you took it, you should be on profit. All right. So at the moment, as it stands, if you are on this trade, you have to move your stop loss to this area here. Your stop loss should be at 1.09334. So I'm going to move my stop loss only if you are interested on doing swing trading. Okay. I'm going here, moving it here. Right. Right. So, and the other thing that is to work important for you as you'll be learning to trade. Usually when you open trades, you have to open 2 positions. If you decided to risk, let's say $20 on that particular trade, you have to open 2 positions. Like the other one, you have to open 2 positions that when you add them together, they give you that $20 loss. All right. So why do you usually do that? Why do we usually do that? We do that based on the fact that if the other one will reach take profit, okay, and then the other one, you will just leave it to go as much as you can. All right. And also you'll move stop loss to your entry price. Even if the market reverses, you don't care because you already secured profit for that particular trade. Right. So now the signals that I'm going to give you for today is CHF. CHF is going up. So on the H4 here, look, price broke this area. So the valid trades that you can take are this here. So buy limit there, okay, because we are going up. And I'm going to do 2 positions, buy limit, okay. I move this one's here, okay. My stop loss will be here at 125 to 294, okay. Why? Because I'm expecting price to come down to test this area and go up. So in short, price have to come down to 125.700. That is CHF JPY. Okay. Let me do this. All right. So what about pound CAD? Pound CAD, where is it? Pound CAD monthly. On the weekly, I expect pound CAD to reach this area. Okay, look. Let's see on the daily. I'm expecting pound CAD to reach this area. So where can you enter this trade? On the H4, nice entry here. Oh, looks like it's already been tested. It means that we should be on it already. So on the H4, as it stands, guys, pound CAD is on for a sell. We should be selling pound CAD. So as for me, like now, I am going to enter sell position, to sell position by market, no sell position, 2 sell positions, and my stop loss is here. Okay. All right. Check. Check again. Oh, still the same thing. Okay. I was trying to adjust the other one. All right. So pound cat, it's on sell already. So we expect price to rally down. Let me screenshot this one. Okay, and screenshot this. And pound MXN. But let me ignore this because this one is, most of you guys might find you don't have it on your brokers. Right? What about dollar ZAR, dollar rand? Which areas that control? There are two areas controlling the market. So either we go up here, and it was nicely tested, and another area here. Do we have rally? Okay, nice. We are here on the monthly. What about the weekly time frame? On the weekly time frame, rally, base, rally up. Okay. Okay. We are here. Let's check. So, because I'm expecting price, this is an area that is fresh, okay, on the weekly, and here down, rally down, and still on the weekly, this boy looks like he's going down. Oh. And was this area which was tested. Another area that was tested on the daily. So rally up. So on the daily. See what we have on the H4. On the H4, for Eurozar, as it stands, you have to. It's a waiting game, okay? The waiting game. The position, the area where you can enter. Here for Eurozar, we use something that we call confirmation trades. So confirmation trades is either we wait for price to cross this line. If price crosses this line, it broke in this area, it means after that price will fall down. Okay, so as it stands, we have to wait to see what price will do, because at the moment price can either go up or go down. So why are we waiting? It's because this area was tested multiple times. Like there was one test, two tests, now is the third test. So the third test meaning there's a high possibility that price can cross this area to go down. So at the moment, we don't know. So until that happens, we don't take any trade. Okay. And what about pound USD? Wow. Okay. Pound USD, we are on the monthly. On the being on the monthly, it means anytime from here, price can go down. Was this area tested? No. What about on the daily? Yes, nothing on the daily. Okay, nice. So with pound USD, our limit orders, actually you should be on that trade. It's a trade that at the moment we can say is valid. It's an enter now trade. Okay. It's an enter now trade with your stop loss at it's too wider, meaning it might take some time to go up. So if you enter this trade, you have to use the minimum lot size you can take. Okay. So as you enter your take profit, now your take profit should be somewhere here. Okay. So I'm going to enter it where it is. It's a buy market, another buy market, and my stop loss what's happening here? Will be there. Okay. So use the minimum amounts, the lot size you can. Okay. 0.01 should be your lot size for this trade. All right. So with that, that's what you can do for those are the trades that you can take today. Okay. So yeah, and anything, any questions? All right. So with that, I will end this session.